First thing we're going to talk about is the TNT strategy. So what is the TNT strategy? Well, the first T stands for trend. We're looking for a trend within the charting system. Now, we created a charting system on board our network that is pretty powerful. It has a lot of potential, I'll say, because in making a strategy, the first thing that you have to find is consistency, right? We all know this. This is the C in this equation, right? And we all know that it's consistency plus volume equals goal. That's what we're looking to commit to. But any strategy, anything can be used to trade. You can throw a Hail Mary into the end zone, but the idea of doing it consistently is where the real power comes from. And you do consistent levels at the lowest level. Sometimes people forget this. Sometimes people think, well, if I can consistently throw a wild, throw out there, and I win, and I win more than I lose, then I'm okay. But eventually you're going to throw a couple consecutive bad throws, right? And that's where people usually go wrong. You're looking to provide a part in anytime you're looking at a strategy, you're looking at any strategy that you do, where is the consistent results? And this one, when we came up with the trend, the TNT strategy, using our charts and using our system. Now, our charts and our system use a priority signal system, which you'll see here in just a second. But the strategy itself is very sound. We look to follow a trend, okay? That's the first thing we look for. And we're looking for higher highs and higher lows within a short period of time, a designated time. We then wait for the next letter, which is negation, right? Or pullback. But TPT didn't really sound so good, right? Or TPPB, and that's even a mouthful to try to say. So we look for a trend, we spot the trend, and we look for negation, which is pullback. Now, along our system, there's arrows, okay? And sometimes there's reverse arrows. So if the trend is heading upwards and you get an arrow up and an arrow up, and the next one is an arrow down, this negation is what we're really looking for, okay? Because the very next arrow up is our signal arrow, right? And then, so this is then the last T, which is trade. Make sense? We're looking for trend, we're looking for negation, and then we're waiting for trade. And if all these things happen without breaking of structure, then this arrow pointing up has a very large rate of success. What that success is, I'm not really sure. I'll be honest with you. I know it's plus 80+% when I trade them because of my spreadsheets that I use. I know it's 80+%. Now that depends on what pair, what time, what strategy, there's a lot of variables. If I were to sit down and try to put them all together and make the systems, but guess what system uses this network, uses this idea of taking a certain position, and if it comes out and it follows structure, and then we go with the last arrow, this is the daily signal format, basically. And it uses this platform and this concept to make daily signal trades. And those are sitting at 95% plus, right, in success. So with that, let's go have a look at the system itself. Of course, most of you know what it looks like. Let me go back in here real quick. Make sure there's nobody in here that needs to come in. Okay. So I'm going to do a new share. I'm going to go here to the screen. We're going to go right here to charts. We're going to go to TNT charts. These are the daily charts. Now, if you look to the left, there are two variables. There's two time periods, in 1 hour and a 2 hour. These are suggested, right? We're using a 1 hour concept of a trade with a 5-minute chart, right? Because really about taking the time with a 5-minute, the shorter amount of time frame you use, the shorter amount of the trade should be staying within that process. Excuse me for 1 second as I exchange coffee cups with my wife. Mine was empty, hers is full. Okay. So basically this is the entire strategy sitting in front of you. We use the arrows. These arrows are depicted by a certain period of time with an immersion process that if it heads out and above a certain point, it will then give us an arrow in a certain direction over a period of time. And you can kind of see that the moving average that we have on here, which is this blue line, is set to 50. Very open, right? We're very transparent when it comes to this strategy. The concept of it being an uptrend is that every arrow going down is considered negation, right? And when we have consistent uptrend happening, the first arrow after negation, which are these two arrows, which is this one right here, is then our signal. The TNT strategy of when to get in is only as good as where you place your, I'll say, structure or your statement or your in or your open price or what have you. And there's a few variables to do so. If you're trading on Nadex, 1 second here. I wish they had a better way, like a keystroke that I could get in with this, get the pen tool going. I got to put something into Zoom for that. But as you see, if this is going to be your arrow in, this is your signal right here. Okay. When this arrow came out, price was sitting up around in this area, was sitting at this area right here. Okay. And since we're on a 5-minute chart, we only want to have 12 bars, because remember, it's 1 hour, right? 1 hour, 60 minutes, 12 times 5, 60. Got it. Okay. So the idea is that 1 hour away from this arrow, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay. It's like, where are we going to be at? Where would you place, if you had a lot of volatility happening at the time, where would you place your, if you were using on Nadex, where would you get the statement at? Would you get the statement right at the money? That would be an ATM, right? If you're placing the statements at structure, I would either do it on structure, which is the support and resistance. That's what these lines are, is support and resistance lines, okay? Or you could place it at other negation, other support area, or other areas of structure, okay? So this would be more of an ITM if you're trading on Nadex. Okay, probably about, let's see, 7, 8, 6, 60. Yeah, this wouldn't be too bad. Actually, this would be a really good structure to be at. And you have to look at that. The shorter the time frame, when you have this, you'll have a little bit less pips to have to worry about, okay? Now, if you've done it at ATM, if you've done it like right at the money when the signal came out, you may have been pretty close to a loss, right? Depending on Nadex or what have you. But you would have only lost, I'd say, about 40 bucks at this point, right? Because you would have probably been able to get in for 60. It was almost at point of, or sorry, switch that. You would have lost about $60, sorry, from this if you did lose, right? Or if you even got to a point of scalping out or what have you. If you would have got it at ATM or ITM, you would have done between $25 and $30 a profit margin, right? But you would have won, easily would have won. Right? And depending on the structure you got, you may have gotten it down a little bit less. You know, if you came down 2 pips, you would have won. It all really depends on that structure. So if you did lose and you lost at this, if your strategy is always place it at ATM, stay with that strategy. Does that make sense? If you're choosing a strategy of either doing ATM or ITM strategy for buying in, always stay at that strategy to let the numbers work out. If you do one ITM and you win, and you do one ATM and you lose, it just wiped out everything for the ITM. Get what I'm saying? And you would need 3 ITMs to cover this process here, or 2 actually. We're really close to 2.5. Does that make sense, Thor?
Yes, absolutely.
Okay. I asked Thor if it makes sense because at his level too, he's well versed. I just want to make sure that I'm not also, you know, trying to speak over anybody's head with this process of the initials. Now, if you came in this signal and it was for Forex, you definitely don't want to go right here at the money, right? Because you're not going to put a stop loss right here because you get stopped out immediately. You want to create a stop loss that's going to give you enough room for what we call market expansion. Okay, me. You got to make enough room for me to get in, right? So with market expansion, what you're looking for is the average, right? And sometimes you get to pick that by what we call an average true range, right? But I'm looking for where structure is at too. But I'm never going to place it directly at structure. I'm going to go a little bit further down. So if I really wanted to do a Forex trade, I would come down around in here. You know, see where all these lines are? So right about here, because I know that this is the lowest point over, I don't want to go back too far, but this is the lowest point within structure, really strong structure, right? So I
And
would
that's where you're setting your stop loss.
yeah, so I'm setting my stop loss here at this point. So that would be about 70.74, right? So 70.74, so 0.7074. Now, I would have been getting in right around 784. So what is that? That's 10 pips, right? At this level now, I'm going to be looking at my risk to reward ratio. And that risk to reward ratio is that if I just risk 10 pips, then I want to go at least 10 pips in that direction, right? And this would be a 1-to-1. Get it? So at this point, would I have made 10 pips? So where would it have to go? 70.84, which is right around in here. And you can see that was an easy win, right? Even if I wanted to go to a relationship of once it got to my first line of first line of take profit, I could move up my stop loss from 70.74 to where? To break even. Okay. And this break even side, once it got here, it never touched again. And then once I get to another 10 pips, I move up to my first take profit. And as it goes up, hits here, comes back down, never touches there again, comes up to another 10 pips, which is right here. So I move up to here. And of course, right here, it gets stopped out, right? So how much money did I make? Well, I made 10 pips here, 10 pips here, and it went up and came back and touched. So I made 20 pips total, right? No matter what a pip is to you, it doesn't really matter. What matters is that or how many lots you have, it doesn't really matter. If you had 0.01, you probably made about $2, right? If you had a mini lot on there, you made 20 bucks. You had a standard lot, you made 200, right? So it comes out to be a pretty lucrative pattern to be able to trade on either side. Now, again, depending on what your balance is, which we'll talk about here in just a minute. Now let's talk about timing. And we're still only looking, we're only using one chart, and this is the only one I first came to. I didn't cherry pick. I could sit back and go back again and again and again and look at chart after chart and find all the examples where the actual arrows work and where they don't work. And 90% of the time that they don't work is when structure has been broken or not allowed to go too far. Like if you get this consolidation, this is probably one that I would have looked at with the consolidation. I really want the arrow to be kind of up here outside this consolidation zone. All right, if I was really being picky, super picky. You can afford to be picky, trust me. So has anybody noticed the timing of the arrows? Thor, do you know when the arrows come out?
I think they're on the quarter hour, aren't they?
Mm-mm.
No? Okay.
Nope. Nice try.
Not sure.
Anybody want to raise their hand and try to figure it out? Every 2 hours.
Oh, 2 hours, okay.
And they're on the odds. Right? Easy to remember. Every 2 hours, and they're on the odds.
Mm-hmm.
Watch this, ready? If I hover over this arrow, you'll see it says 03 o'clock down below, right? 0300. Look at this one, 0500. See, on the odd.
Mm-hmm.
Oops, did I do that wrong? Zero 300. Oh, sorry. They're not just on the odds. They're on the evens as well. But it's every 2 hours. Okay. Let me go here. Now it's proving me wrong. I'm trying to get it right. 2100, 1900, 1500, 1300. Yeah, there it is. You guys seeing that?
Yeah.
Here's 700, 1100, 100. There. Okay. And so if you know when the arrows are coming out, watch what happens. Okay. If I come out and I look like let me see if I can clear this here. I come back to here and it just started to commit to a down. I know that we're heading into a trend, right? So within the next 2 hours, I can come back easily and see, is there an arrow? Nope, there's no arrow, right? Because this came out at 0500, come back at 0700, no arrow. Come back later, up, there's another arrow, but it's heading down. So I haven't really matched my negation yet, right? But by the time I do get some negation happening, there's no real down arrow again to speak of that doesn't break structure, you see? And you can look that back into timing as well, as we see in this timing right here, as we commit to going over the line again and committing to an upward pattern now, an upward trend. You can kind of see by the moving average. Come back 2 hours. We're heading with the upward pattern. We're looking for negation. There's negation at 0,100. Now within the next 2 hours, there's another one for 0,500. So we went from 0,100. So that was 4 hours. It was 2 signals away. Okay. So you wait for another 2 hours and what happens? Boom. There's your number. Where do we get in at? Right there. That's where the open for, if you're using Nadex, that's an ATM price right there. Right now we're on a 15-minute chart, so we're only going to do 8 bars because we're looking for a 2-hour movement, right? This is the timing part. So we'll come back in here. Let me get my pen. So this is ATM right here. If we would have done structure, I would have probably came down within this block somewhere here and gotten a statement, and this would have been an ITM. This would have been my preferred process, would have been right in here. I really don't like doing ATM on Nadex because a lot of the market makers use an ATM solution there. So I try not to do that. So if I get in, I'm using this closeness of price to try to get something down below structure, right? And we're looking at 8. 1, 2, 3, 4, 5, 6, 7, 8. So this one right here. This is the expiry time right here. Right there. Yep. Oh. So 2 hours from there. 1, 2, 3, 4. Right there. So 7089. 7089 is where it expired at. 2 hours later, boom, there's the win. Right? So an 880. That would have been an easy, good daily price right there. You would have been able to get into and easily got in right away, right from the time of signal firing. Well, that signal firing, you could have got into that process and won. If it was a Nadex trade, or if it was a Forex trade, I should say, again, coming down to structure right about there. This is my stop loss. So 70, 74, 70, okay, another 10. Is this the same? Is this the same pair? It's Auto USD. So it's the same trade, almost basically, right? Let's look at a different one real quick. Let's see if we can find another one. Up, negation, nothing there. Go down to Euro, Great Britain, Pound. This one's too static. We can get into any trades. Above, negation. Now this is a little bit crazier one because it doesn't really break structure too much. If it were broke structure down in here, because it consolidated right here, kind of broke through, still stayed on the up. We got negation right there, committing to structure. And then this is the one that's right here. This would have been the one you would have taken. Okay, there's ATM. I was doing, I'd probably even come back down in here. And this would give me a pretty big stop loss in here. It's a 67 to 50, so 17 pips. So 17 pips. But then how many pips did it go from here? If I came up to 17 pips, we got in at 124.67. There's 84 right there. Right? Right there. So this would have been the first take profit on a 1-to-1. And then we could have moved up to here. And we would have still been in, if we would have still been in trading, 85.15. So the other take profit would have been right here. We would have been into here. We would have been 17 pips in plus profit as we're waiting out our trade, right? Now at this point, you could do what Thor does. You could do a double over to where you have, if you do 0.2 micro lots, once it gets to break even and it gets to the first profit margin that you want, you could take one and just keep one on, right, and let the other one do what it's going to do, and just let it keep moving and doing a stop loss along with it, right? And that's what Thor uses in when he does spreads, right?
Yeah.
The other act is that using this on spreads, and this mentality using on spreads is the same way that you do it on, like with Forex, right? If you use this idea that you find a statement price that's really close, remember spreads are like a box, right? And this is time and this is price, right? And what we're looking to do is to get into a statement that price is really close. If we're doing a buy, remember, if we're doing a buy, you want the price really close to the floor. But with that, you got a little bit of a double-edged sword, right? That it has to go into what we call premium before you start making money. Okay, so it has to move just a little bit. So even though you got it close to the floor and there's low risk, right? You may only be risking $9 or so. You still have to let it move a little bit further, depending on, like, if you went in with an in the middle spread, right, where you're risking 150 with a potential of making 150, right, and your numbers here, and it goes up, right? So here, if it went up and it followed everything, you'd probably only make, if you did the 17, you probably make about $10 on this because you got $9 in premium off, and so forth from there. The index rates are confusing. Yes, they are. They're very confusing.
Well,
but
you always have to overcome the bid-ask spread.
yes,
You're always fighting that. So
but the bid-ask spread in the with the middle one is a lot less.
Right.
What deters a lot of people is the money and risk, right? It's the money and risk, and that you have to visually watch for a stop loss. Like if you get to here and the thing starts tanking and it really drops, right? With here, if it really drops, you only lose $9. With here, if it really drops, so there's give and take to every single type of trading that there is. There's pros and cons to it all. If you use the floor ceiling mentality like Thor uses, you get into a little bit of profits and a little bit of loss. That's it, right? But here you have more potential, but you have higher risk. And that's what it really comes down. You need to have the idea of what you want to be satisfied with. Are you comfortable with the low profit, low risk? Because what are you hunting for? Come on, somebody say it. What are you hunting for? Somebody said money. Yes, you are hunting for money. Thank you, Captain Obvious. I appreciate that. But you are hunting for consistency. This is what you're really hunting for. Why? Because then you just add volume. Thor, I'm going to show you your trades right now. And again, this isn't about, hey, Thor's a superstar trader. He is a superstar trader because he's consistent and he works hard. And don't look at this as like, oh, it's not that much money. You may not think it's a lot of money, but what he has here is a consistency value. Okay. And he's using what we call a modifier of 2. Okay. So we count his unit as 2. All right. So it's a double. So this unit we see as 1, but his contracts are 2. Why? Because he takes a take profit on one of them as he lets the other go to expiry, right? And then there's some that he holds completely. Maybe they didn't get to his number and they both went to expiry. Okay. So if we looked at his average trade rate, okay, he's sitting at 70% success. And from the 22nd of January to right now, which is even less than a month, you may not think that $128 is a lot of money, but it's in profit margin, right? And his risk is never really more than, I'd say, $10, $11, $12 per each one, right? That's after fees and everything.
There's a few that are a little higher. I try never to go over 20 on 2 contracts. So, try to keep it small.
Right.
There may be a few that are a bit higher.
Right. So, and again, you're not sitting down trading all day long. This is only about an hour in the morning and sometimes in the afternoon. It's not a lot of time put into this, right? And you may only think $128 is not a lot of money, is not a lot of money. And it's really not, but it's not a lot of risk and not a lot of time.
And obviously, as your account grows, you use the incremental crawl and you start increasing the number of trades. I'd keep it consistent at 2 because I want this report to be consistent.
Right.
I could definitely trade more, but I want to, have the numbers fairly consistent.
Yeah, and that's true. And Bino Trading says that, you know, how does Thor cope with the widespread slowness? Yeah, absolutely. And that's what it is. That's what spreads are
Scroll up to the
designed.
one where we lost 70 cents, and that's
Yeah,
the
yeah. This is the ether of everything, right? Where it's like 70-cent loss, right? You're like, oh, come on, 60-cent loss, 70-cent loss. You're like, come on, I was in profit forever, and then it shrunk out. The idea is because stores using a process of the floor ceiling mentality, right? And that's, you know, on the buy, if it was a buy, considered a buy, he's getting very close to the floor. But that's the suggested price. That's a statement price. What they do then is get you on a little bit of bid-ask spread. So that's here, right? So if you were doing a buy, if you're doing a sell, you would get in here, but your bid-ask spread would be here before you start making money. You see what I'm saying? So, and this might be $9, and this might be, say, $4, whatever, right? Or 4 pips, whatever they have in there. And that premium kind of gets lost, but most of the trades come back in here and do this number, right? And then sometimes at the last second they're here, or they just hit below, you know, the bid-ask spread process. So he doesn't lose very much. But in some cases they go on and they close out because there's not a lot of time that's initiated in that process, right? He doesn't get a lot of time. Now,
yeah, you know, if you get in right at the beginning of the box, you have 2 hours essentially from 9 to 11 or 1 to 3, whatever. If you get in later, you can, in fact, I haven't posted it yet because it just went off at 11 o'clock. Made about $10, and I got in with only 45 minutes to go.
Right.
The goal is to absolutely minimize your losses.
Absolutely, with no prejudice, right? And I'll show you why. You get into the middle box, right, on spreads, and you're going to be risking about $150, right, to win $150. You got an R1-to-1 ratio process there, and that opportunity is wonderful. If you got a nice size balance, let's say you got $1,500 that's in there, and you have that availability, right? How many contracts should you get in? If you had 1,500 and you got into 10 contracts, you'd be at 100% risk value, and this is a big no bueno, right? Big no bueno. You don't want to be risking $1,500 in one trade. What happens if it goes south? You lose everything you got, right? At this ratio here of trading from the outside, the fringe of the box, either side, you can get into more contracts. Like if he got into 10 now, he'd only be risking about $100 if he still had the same $1,500 balance. Okay, he'd be risking about $100. I'm sorry, about $200, I should say, which is right around 15% of his balance. Okay, a little bit less or more. Okay, but the concept is still is much more sound than risking 100% of your balance. You get what I'm saying? And if he had that potential, how much money? If he traded 5 times the amount, he would have made $600, right? About $600 for the month, and he's still doing it very conservatively, right? If he wanted to do more 10, 20, 30, 40 contracts, he could afford to do that and still remain only about 50% of his balance at that point at any one time. So there is something to say with that. Yes, the store use working orders. I've tried that and just sit there and initiate time decay is frustrating on spreads. Yes, it is. Absolutely. Time decay is frustrating. The market makers have a wonderful system here. Okay. They make it just plausible enough for you to get in and just frustrating because they know where all the levels at. These ain't traders like us. They ain't retail traders. They're corporate traders. They know, they're structure traders. They know how to get us into these trades. Our job is to find the consistency value like Thor's finding right now, get in and make it work. This is why we use the daily platform the way we do, right? Because
I don't use market orders for entries, but I always use market orders for the first take profit.
Yeah. So if he gets in and he uses 2 contracts and he gets in at this line here, once it goes, if it's a buy, of course, as it goes through and he gets to his first level, he takes 1 contract off and he lets the other contract do with what it may, right? And sometimes that works in his favor and it caps out, or if it doesn't, it just expires, and it expires in a positive. Sometimes that second contract pulls back and eats some of his of his profit, or sometimes it might even come in a loss and eat some of the first profit that he's in. Make sense? So, but this is a wonderful solution as well, that if you get runaways at this point, you're protected on both sides. If the first one comes in and caps out, but the other one runs off, then you're only capped out at this loss structure here, okay? And only sucks up this loss, which then this one would have made that plus some. But if they both run away in the same direction, then he gets a win-win, right? And even in some cases, maybe even more of a win than if he had on the first take profit. Makes sense?
Right.
So the opportunity is there and the strategy is sound. And again, this last couple of weeks have been pretty tough. It's February. You know, the first week of February is like in the first, second day, it was the NFP. So it's been a tough week. All right. So that's basically that with the strategy. So we've talked about timing. We've talked about position with the TNT strategy. At this time, I want to take just a quick second to say thank you very much for taking time out of your schedule to watch this video in this process. My name is Max Farrell. This is DexFxMarkets.com, and I look forward to seeing you inside. And as always, trade well.